Thank you for joining us. This is Business Incorporated live from Lagos, Nigeria. It's the first business day for the week. Welcome to the program. I'm Chimize Obi Iwagu. On the program today, oil prices rise following tensions in the Middle East, where top crude exporter Saudi Arabia and other Arab states cut off ties with Qatar. South Sudan is producing around 130,000 barrels of oil a day and wants to increase its refinery capacity to supply fuel to neighboring countries. Plus, South Africa's biggest landline provider, Telkom, reports a rise in full-year earnings and revenue. Let's get started now with the markets, and we begin here in Africa. It's yet another beautiful beginning for the Nigerian Stock Exchange as the bulls continue to wax stronger, trading as high as 3.9% at intraday. How the consumers' goods, industrial sector and the oil and gas are the major gainers at intraday. In South Africa, the market is in the red, down 0.26%. Egypt was also trading high despite the Middle East crisis. The index was up 0.17%. Kenya closed up 1.13% on Friday. And markets in the Middle East are trading waters after Saudi Arabia, Egypt, the United Arab Emirates and Bahrain severed their ties with Qatar, accusing it of supporting terrorism and opening up the worst rift in years among some of the most powerful states in the Arab world. Iran, long at odds with Saudi Arabia and behind-the-scenes target of the move, immediately blamed U.S. President Donald Trump for setting the stage during his recent trip to Riyadh. The coordinated move with Yemen and Libya's eastern-based government joining in later created a dramatic rift among the Arab nations, many of which are in OPEC. All the numbers were in the red at intraday, with Qatar falling the most, down 7.54%. Abu Dhabi was down 0.24%. Dubai was trading low 1.01%. And Saudi Arabia, of course, was down 0.59%. And in Europe, bourses were mixed today as investors eyed an upcoming monetary policy meeting from the European Central Bank and reacted to the terrorist attack in London over the weekend, just a few days ahead of a general election. The FTSE 100 was 0.15% higher, while the CAC 40 dropped slightly by around 0.1%. In Germany, markets are closed owing to a public holiday. The best performing stock in early trade was Ocado, which rose more than 6%. The UK online grocer is set to conclude a deal with an unnamed regional European retailer. Banco Popular, on the other hand, dropped more than 4% in early deals. The Spanish lender has been struggling since reports emerged that the bank would have to be wound down if it didn't find a buyer. Our shares of the Portuguese energy firm EDP also fell nearly 3% after its CEO was named a suspect in a corruption investigation. And UK Prime Minister Theresa May says it's time to step up the fight against Islamist extremism in the wake of the new attack. Investors will also be looking at UK PMI services data out today and monthly car registrations data. And the U.S. stock index futures are expected to open little change today as traders paused for breath after various benchmark indices hit record highs in the previous session. Now, Monday we'll see services PMI data for May released at around 9:45 a.m. Eastern Time, while ISM non-manufacturing data for May and factory orders for April are both scheduled for 10 a.m. Eastern Time. On the earnings front, Cobber Software and Thor Industries are both due to report after the market closed. Looking at the numbers there, we can see all are in the red, with the Dow Jones Industrial Average trading lower 0.04%. S&P 500 futures, it's showing the market going down 0.06%, and Nasdaq down 0.09%. And markets in Asia closed mostly lower today following an attack in central London over the weekend, and as oil prices gained sharply after 4 countries snapped diplomatic ties with Qatar. The Nikkei 225 was marginally lower, closing down 0.03% at 20,170.82. South Korea's benchmark Kospi index finished the session 0.13% down at 2,368.62. The Australian ASX 200 shed a 0.57% to close at 5,754.9, driven largely by weakness in major financial stocks. Markets in China were mixed despite the positive read from the May Kaizen Services PMI, with the Hang Seng Index down 0.41%. The Shanghai Composite closed 0.45% down, while the Shenzhen Composite finished higher by 0.689%. We move over now to commodities with a precious metal. Now, gold held steady today after hitting its highest in over 6 weeks earlier, buoyed by disappointing U.S. jobs data after that appeared to dilute the prospects for an aggressive string of interest rate hikes in the United States. U.S. job growth slowed in May, and employment gains in the prior 2 months were not as strong as previously reported, suggesting the labor market was losing momentum despite the unemployment rate falling to a 16-year low of 4.3%. Spot gold had climbed 0.1% to $1,280.7 per ounce. It hit a peak of $1,281 an ounce early in the session, its strongest since April 21. U.S. gold futures for August delivery were up 0.2% at $1,283 an ounce. Now, higher interest rates put pressure on gold prices by increasing the opportunity cost of holding non-yielding bullion.